Hi friends, so today I am going to show you how you can position yourself to trade like Raoul Pal. If you are new and you would like to learn how to position your trades from one of the top minds in the investing world, then watch this video. I will be going into a deep dive that explains step by step on how you can take what macro investors are thinking and how you can apply it to your trades directly. So this way we can learn and copy what smart money is doing. So without further ado, I'm going to jump into this video and you will see that Raoul Pal is very convinced that bonds is going to be a very good play.
This one comes to us from Twitter, from JJ Be Present. Does Raoul think TLT is a good investment? And if so, what's the whole period? We should say iShares 20+ year Treasury bond ETF.
I like bonds. That's a decent way of playing it. You know, manage your own risk. You run your own trade. I run mine. But I think the time horizon I'm looking for interest rates to fall, it usually goes through recession and through the other side. And so I would imagine that it's a decent trade for 9 months. But we need confirmation that this bloody bond yields are turning, or the TLT is turning, and we're just not getting it yet.
So what Raoul Pal is saying is he believes that buying bonds in the next 9 months is going to be a very solid play. The bond market, and the one that was questioned, is the TLT. The TLT is the 20+ year Treasury bond ETF, which is where most people are pricing in where interest rates will be in the future. So you can see over here, the market is pricing in that the interest rate is going to be at 3.65%. He believes that in the near future, we would see the yields fall, and when yields fall, bond prices would go back up to where it was in the past. So if we open up the 20-year yield, we can see when the yield was close to 1.7%. This was in August. Let's go back to the TLT. We can see that in August of 2021, we can see that the price was around $140. So that's the level that we can expect if yields were to crash once more. So how do we position ourselves and what is Raoul Pal looking for? At the end of the video, at the end of the clip just now, he mentioned that he wants to see, number one, the yield curving down or the TLT curving up. What Raoul Pal is saying is that the economy is going to do very bad, and when the economy does bad, the Federal Reserve would then reduce interest rates. And when federal interest rates are reduced, the 20-year yield will follow suit and bond prices would then rise up. Raoul Pal also believes that the yield cannot go up to 4% or the economy would crash. And so the markets will not be pricing in up to a 4% hike. From a pure technical analysis point, we can see that we are at a level of previous support and resistance over here, which is very, very important, because the next level down would be around here. So we have a couple of options if we want to make this play. Number one, let's hope that this is the bottoming pattern. Let's say we see a bounce here and it goes up. Your entry would be at the $120 range. So what we want to see is a double bottom and break of the neckline at the 120 level. And if that is your entry, your risk to reward ratio at this point would be very, very high. Remember, we're going to trace all the way back to the 150 level. And that gives you a 1:3 risk to reward ratio, around there, rough estimation. So what we can do is take a preemptive move and we buy right here as well at the bottom. Again, timing the bottom is not very good, but if you do get the bottom right, you can make a much more substantial gain, which means if we position much smaller at this level, the potential gains is 35%. If we wait for confirmation, we will only get 25%. So which means you can take a much smaller position right here and potentially make outsized gains as well. Now, what is the downside? Again, based on the macro theory of Raoul Pal, if you'd like to see the macro theory breakdown, please watch my previous video. Now I'm breaking down how we can apply that into a trade. So with a potential drawdown of 6%, what can we potentially do? Number one, we can buy the ETF. Straightforward, and set a stop loss right here. Because if it breaks through here, which means rates are going to go much higher and the macro thesis of Raoul Pal is negated. So stop loss would be here, entry would be here. Second entry, potential entry would be if we see this bounce, breaks through, your entry would be here and your stop loss would be here. Your take profit would be within this zone. So I would suggest that you set multiple take profit levels throughout this based on different levels of resistance, and when it hits, you can potentially make some money over there. I'm going to give you another potential option right here. Since this drawdown, if we were to take a look at it, is about $6, $7, $8. It's about $6. Let's take a look at what the option market is pricing. So based on Raoul Pal's theory of a 9-month hold, let's see what the option market has for us. Let's take a look at the April options. So for the April options, if we were to buy at the money right now at 110, that will cost us about, we take the average, that is about $7 right here. So if we buy one option at $7, this is the risk to reward ratio right here. It is a 5 times risk to reward ratio. The reason why it stops here, not because we're setting a stop loss here, but the maximum loss is, well, $600 or $700 depending on how much the option that you're going to pay. So even if it cracks down, you have the power to hold all the way up for the next 9 months, because this is going to be a very, very long trade. So the platform that I'm showing here right now is Moomoo. You can see I have the TLT opened, and this is how you would trade the options. So this is how you would want to position yourself if you're trying to get into bonds. Am I going to get into bonds? Probably. Am I going to be immediately buying bonds right now? Yes, I am going to enter a small position right here due to a very good potential setup of a double top forming or a double bottom forming. Again, the position size will be a lot smaller. The risk to reward ratio at this level is much, much higher, close to a 6 risk to reward ratio, and I like those odds. So even if I am wrong, I have no problem holding on to those bonds for the long term. So I hope you learned something new today. I'm a part-time swing trader. My trading style is to hold for weeks to months, and my goal isn't to become the best trader or investor, but just to become a profitable one. Trading will never become my full-time job, but it is a side hustle for me, which gives me a good amount of income. And so if you'd like to pick the brain of someone who is a part-time swing trader, consider subscribing. I will try my best to post long-form videos on YouTube as well, but follow me on TikTok and Twitter for more content as well.